Hi, I'm Kahler. Thanks for joining me. Well, although I was selling real estate instead of attending college in my early 20s, I got the chance to pay a lot of tuition to educate myself, especially in the world of investing. I had some money in savings and some mutual funds in an IRA, but they just weren't building wealth fast enough for a 22-year-old. So at that time, gold prices were going up and looked like they were going higher. So I took $1,000 out of my savings and put it into gold futures in the commodities market. And this is where you buy a $100,000 contract for $1,000 and the broker loans you $99,000. So it's pretty high leverage. In just a few days, my $1,000 had turned into $3,000. Well, I was feeling pretty good about that. My broker suggested putting the $3,000 I had made into pork bellies. Now, I really didn't even know what they were, but he seemed to know what they were, so I bought pork bellies. Now, for a few days, everything was fine, but then the price of pork bellies tanked. For 5 days straight, the price fell so dramatically that trading was stopped on the exchange, which means it was stopped at the beginning of the day. And it was stopped for 5 days straight. Well, I couldn't even sell. I couldn't even get out. There was nothing to do but watch the losses pile up. Now, by the time trading resumed 5 days later, I had a margin call for $12,500. To pay that, I had to wipe out my savings and cash in my IRA. At least I had savings, so I didn't have to go borrow the money. I had made a classic beginner's mistake. I speculated instead of invested. Now, one way to look at planning for the financial future is to imagine it as a pyramid with 3 tiers. The bottom one is saving, the next is investing, and the third is speculating. Saving is putting money away for future needs, often in savings accounts or certificates of deposit. The primary purpose isn't building wealth, it's having money available when you need it for emergencies or large purchases. You don't earn much in interest, but you won't lose what you started with. Now, investing is different. It's diversifying money into stocks, bonds, real estate, commodities, and other assets. The purpose is building wealth over the long term. The returns over time will be more than you would have earned from simple savings. But you do risk losing some of your original investment, especially on a short-term basis like we saw in 2008-2009. Having a diversified portfolio minimizes the risk of ever losing all of it. Now, speculating is putting money into a high-risk investment in the hope of building wealth quickly. Trying to time the markets through day trading and borrowing to buy stocks, real estates, or other commodities are types of speculating. Another is putting everything you have into one investment. Now, true, great fortunes have been made through speculating. Oftentimes, small business people have everything they own in their small business and what they do. Definitely, it's a form of speculating, but it's probably the best form of speculating that there is. Now, a lot more fortunes have been lost speculating than ever have been made. The numbers are in the 90th percentile of people that lose money in the futures, playing the futures markets. Now, there is a place for speculation, especially in a diversified portfolio, but it's a very, very small place. Not only can you lose your initial investment, you can, as I did with my pork bellies, lose way more money than you had to begin with. When novices skip from saving to speculating, chances are good they'll lose big. Unfortunately, too many of them learn the wrong lesson. They decide investing is too risky, never realizing that they were speculating rather than investing. As a result, in the future, they may limit themselves to the savings tier. Their money stays safe, but they lose in a big way by not investing and earning the long-term returns that are so important in maintaining purchasing power, building net worth, and achieving financial security. If unlucky speculators are luckier, they'll realize, as I eventually did, that they have just paid some very expensive tuition. They'll use the experience as a starting point to learn the difference between speculating and investing. Diversified, long-term investors may not make huge fortunes overnight, but they do build wealth, and they sleep a lot better while they're doing it. Thanks for joining me.